managed to bring down our debt to GDP ratio to a historic low of 39.6%. Our revenues were robust after the passage of bold tax reform measures. In 2019, revenues were at 16.1% of GDP, our best performance in 22 years. This provided solid footing for our Build, Build, Build program. Despite the delay in the passing of the budget for 2019, we were able to catch up and accelerate our spending on infrastructure investments to 5.4% of GDP last year, double the average infrastructure spending to GDP for the past 50 years. Inflation also remains stable and under control, averaging 3% from 2016 to 2019. For the month of June this year, the inflation rate further slowed to 2.5%. Also, prices in June have only gone up by less than 0.25% compared to the prices at the start of this year. At the end of 2019, we had achieved the lowest recorded rates of unemployment at 4.5%, underemployment at 13%, and poverty incidence at 16.7%. In other words, without this global economic crisis, we had realized better economic outcomes for our people. Our economy was ready to soar. When the health crisis happened, we had already received a BBB+ credit rating, the highest in our country's history. And even amidst the pandemic, international credit rating agencies have affirmed our sovereign rating and have kept them at investment-grade levels. In fact, the Japanese credit rating agency upgraded us from BBB+ to A- last month. This is a vote of confidence in a sea of credit rating downgrades and negative outlook revisions worldwide. With our sterling credit worthiness, the commercial markets and development partners continue to provide us financing at lower interest rates and longer repayment periods. When the government can access debt at low cost, so will our private sector enterprises in need of liquidity assistance. That is so important in recovering from the ravages of the painful but necessary lockdown. The ability to finance at lower cost will help us bounce back more quickly and more sustainably. This is what makes the credit rating so crucial to restoring our economy's health. Today, the Department of Finance has raised a total of $5.3 billion in concessional budgetary support from our development partners. On top of this, the Philippines secured a total of $126 million in grant and loan financing from our development partners for various COVID-specific projects. This includes purchase of emergency medical supplies and equipment, as well as food distribution program for the poorest households in Metro Manila. In the commercial market, we raised $2.35 billion from our latest global bond offering that fetched the lowest ever coupon in the US dollar market. All these are a clear vote of confidence in our future recovery and a favorable appraisal of where our prospects stand compared to the rest of the world. In terms of domestic sources, we have raised 1.2 trillion pesos in gross domestic borrowings from the beginning of the year to support our budget. As part of this, the Bangko Sentral ng Pilipinas entered into a repurchase agreement with the national government amounting to 300 billion pesos to help us fund our COVID-19 initiatives. Moreover, we have received a total of 149 billion pesos in remittances from government-owned or controlled corporations since the start of the year. The Department of Budget and Management has thus far released allotments totaling 375 billion pesos for the government's COVID-19 response program. While the people's health and safety remain a priority, we cannot keep on retreating from the virus at the cost of our livelihoods. Metro Manila and Calabarzon account for 67% of the country's economy. It is vital that